Government screw up. We'll let you set up a solo 401k for free. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial, and welcome to another episode of Adam Talks. On this podcast, I'm going to explain how a government screw up actually is going to allow you to set up a solo 401k for absolute nothing, for free. Why? Because they screwed up a tax credit that probably should be specifically reserved for businesses with employees, with non-highly compensated employees, but they screwed up in the writing and the wording of the provision. And by doing so, they opened up the credit, a $1,500 tax credit over 3 years, $500 tax credit a year for 3 years to anyone, any business, self-employed, sole proprietor, single member LLC, C Corp, S Corp, that wants to set up a solo 401k in 23 or 24 and get a $1,500 tax credit. Now, simply by filing Form 8881, you can be able to get this tax credit and you can submit it and you'll get a $500 tax credit. When you put it all together, $1,500 tax credit over 3 years. And you can use that to set up your own solo 401k plan. And if you do it with IRA Financial, you'll even get an additional 1 year of annual administration, record keeping, consulting, and tax reporting for free. So this is a government screw up. Now, I'm going to explain why it's a screw up and why I've waited so long, a little over a year, to tell all of you about it. So back in December 2022, Secure Act 2.0 was released. It was a huge piece of retirement legislation. It was tucked into a larger bill, about 400 pages, 80 or so provisions. Did a lot of blogs and videos and podcasts about it. But one provision particularly involves something called an auto enrollment tax credit. Okay. Now, in general, over the years, whenever the IRS or the government has set forth rules for businesses to get tax credits in the 401k world, it's generally been for businesses with employees. More specifically, companies that have non-highly compensated employees, NHCE. That means someone who owns less than 5% of the business and makes less than 150K. Rank and file employees, non-owners, non-executives. And that's been really the core of the tax credit intent with respect to 401ks is, hey, number one, let's get businesses, specifically businesses with less than 100 employees, let's incentivize them to set up 401k plans. It's good. It's good policy. Number two, let's incentivize them to offer benefits to employees. Number three, let's incentivize them to offer more benefits to employees. And then fourth, let's make it as easy as possible. So in Secure Act 2.0, there's three main tax credits for businesses to adopt or have a 401k. The first is a startup plan credit. It goes up to $5,000. The issue is you need to have non-highly compensated employees. Okay, so you get a set number per each non-highly compensated employee up to a $5,000 amount. So it's essentially for businesses up to 100 employees. It's a 3-year credit, and you get a certain amount for each employee up to 5K. Why is that there? To incentivize businesses to set up solo K or 401ks, I should say, and then basically offer them a tax credit, basically offset the cost of the startup. The second credit is something called employer profit sharing contribution. And for businesses that have a 401k with non-highly compensated employees that do employer profit sharing contributions, they'll give a $1,000 annual per employee per credit for 5 years. Okay, so if you're doing a lot of credits, employer contributions to non-highly compensated employees, you're going to get up to a $1,000 annual credit per employee. Okay, and it's only for employees that don't earn more than 100K. So again, incentivizing businesses to give more benefits to the employees. The startup credit I mentioned and this employer contribution credit only works if you have a 401k with non-highly compensated employees. Now, this third credit is called the auto enrollment credit. And generally what an auto enrollment credit is a credit that is provided to a business that chooses an option in the 401k to automatically enroll their employees in the 401k. It's called auto enroll. Why do they care about auto enrollment? Whereas the studies and statistics have clearly shown that if you auto enroll employees into a plan, they're just going to save more, and there's less chance they're going to opt out. Why? Because they have to actually proactively opt out. Whereas if you don't auto enroll someone, then that person has to actively opt in. Okay. And it's obviously, studies are clear, just like subscriptions, we all deal with this. It's more of a pain to opt out. So you just kind of keep paying until you drum up the strength to actually deal with this stuff. So the studies basically show you want people to auto enroll. Starting in 2025, they're going to actually force all plans to auto enroll employees. So this auto enrollment credit, and here's the screw up. It should have language that says it's only for non-highly compensated employees. It absolutely should. Why? If you have a solo 401k, it's essentially for a business that only has owner employees or their spouses. You cannot have any non-owner employees that work more than 1,000 hours to have a solo K. And you generally don't have a non-highly compensated employee, right? Because it's only owners or their spouses. And spouses aren't deemed employees under ERISA. So you would never have a non-highly compensated employee in a solo 401k. Doesn't make sense. So the thought was, hey, the auto enrollment credit should only be for plans that have non-highly compensated employees, non-solo 401ks. The language doesn't say that. The word non-highly compensated employee doesn't come up. So for a year, when the Secure Act 2.0 came out at the end of 22, I looked at this with a bunch of accountants and risk attorneys, and we basically were like, there's a screw up here, but we're going to wait for the IRS to kind of fix it because it doesn't make sense. Well, it's a year later and they haven't fixed it. So giving the IRS a whole year to add revisions, come up with some type of revenue procedure, anything that adds clarity on this credit, they haven't. So what I did a year later is I actually made a note on my calendar. I said, okay, this was like last January. I said, okay, in a year, check out this credit again. If nothing's happening, feel comfortable going forward and, publicly announcing that, this credit is available for solo K. So before doing that, I spoke to a number of ERISA attorneys, and they obviously feel the same way I do as a tax attorney, is there has to be some screw up here because there's no way they would want this auto enrollment credit, which is $500 credit for 3 years, $1,500 tax credit, to apply to a solo 401k that does not have non-highly compensated. Why would we incentivize a business owner to do this? To auto enroll themselves. Clearly, if you set up a solo K, you obviously want to do it, right? You want to participate. So why do you need to force yourself to auto enroll? Just doesn't make any sense, right? It really is a circular argument. So the bottom line is the language doesn't say that. The language just says, if you do this, meaning you literally check a box in the plan and say, I'm going to auto enroll myself or my spouse, you can get this credit. And the credit's available on Form 8881, and you'll get a $1,500 tax credit over 3 years. Now, why are tax credits so valuable? For a number of reasons. Number one, a credit reduces the tax liability owed dollar for dollar. So, for example, if you earn $100,000 W-2 and you have a $15,000 tax credit, you only pay tax on $85,000. Well, that's what a deduction is. So a credit says if you make $100,000 and you owe the IRS $15,000 and you have a $5,000 credit, you only pay tax of $10,000. So the credit reduces dollar for dollar. Whereas the deduction, $100,000, you got a $15,000 deduction, you pay tax on $85,000. So it doesn't reduce the tax you owe dollar for dollar. It just reduces your tax base, the 100 to the 85 in my example. Whereas the credit will reduce the 15 tax I owed in my example directly to 10. So credits are far, far more valuable than deductions. It's not a deduction they're giving you. They're giving you a credit, which is literally almost cash in your pocket. So if you get a refund, this credit is going to add to your refund. It's literally taking dollars you owe in tax and just slicing it. So let's say you owe the IRS $12,000, you have a $2,000 tax credit, you owe the IRS $10K. So my point is, this is super valuable. This screw up is going to let anyone set up a solo 401k. Even though we're in 24, you can still set one up for free in 23. You can set up in 24. All you need to do is work with a company like IRA Financial that understands how the credit works, I'll help you do it, Form 8881. We'll make sure we check the box on the plan documents to give you the auto enrollment feature. Done. You get $15, $100 tax credit free from the IRS simply by a government screw up. So I wanted to share it with all of you. I waited a while to do this, and I just thought, hey, it's time now to kind of spread the word and let people know that, hey, the IRS had a year to fix this screw up, and they screwed up, and whoever drafted this didn't think it through, because all they had to do is put the words non-highly compensated employee in. They didn't, they failed. And now we all can take advantage of this. So set up a solo 401k. You need to have a business, could be a side gig. You just can't have any full-time employees. That means a non-owner that works 1,000 hours or more. Spouses do not count. You can set up a solo 401k, get the $1,500 tax credit, which basically means you can set up the plan for free, get an extra year consulting if you work with IRA Financial, and you're able to put away $69,000 or $76,500 if you're over 50. You can borrow up to $50K. You can do self-directed investments, stocks. You can also do real estate, cryptos, gold, private placements, private business. You can use leverage, buy real estate without tax. You can super leverage up property. You have great asset and credit protection. It's literally the best retirement plan for the self-employed, and you can get it for free. What a screw up. Love it when we can tell the IRS and government they screwed up. They did. This is a perfect example. So now you're all aware, no excuses, whether you have a side business or a full-time business with no full-time employees. There's no excuse now to set up a solo 401k. The IRS is literally giving you 1,500 reasons to do it. That's it. Appreciate you guys listening. If you're watching on YouTube, also really appreciate it. Don't forget to leave a good review. The reviews really help. It will get this podcast boosted on like Spotify and Apple, and then more people could listen to it and learn from it, and hopefully get $1,500 tax credits from the IRS for literally doing nothing, just setting up a solo 401k and taking advantage of an amazing plan, securing their retirement future. So that's it. Have a great day. I hope to see everyone again next week. Thanks again. Take care.